Hello everyone, welcome back to my channel. So today marks the beginning of week number 13 in this road to 200k challenge. I decided, because I had the time to do so, I decided to make another live section for you guys. And so without any further ado, let's get into it. So let's start because prices are not going that good at the moment, especially for the stock that I have probably the largest holding, which is still OD. And so let's try to simply place calls on it right away. Alright, so see how it is. Yeah, and apparently the way it seems that with a strike price of 98 they are no longer available. Alright, and so we have to go for the 2-week option. Let's see how much is the price. So the price here it is. Yeah, it's a nice premium, not that much given the fact that it's for 2 weeks, but yeah, it's better than nothing. So let's start by doing this. Right, let's start by trying to sell at 172, for example. Here, let's try to do this. Right, so submitted. Alright, apparently it did not, it was not filled. So let's try by doing this way. It didn't fill out. I really want to fill out this one out as soon as possible because the price is not moving in our favor, and so I just want to make sure that I get the lowest possible price here. Right. Yes, it was filled. Alright, so to the limit of the 162. Actually, it was close to 170, closer to 170, so it was actually better than I thought it would. So yeah, and we got a very good premium out of this. So this one is out of the way. Next up, in terms of calls, any other calls that I can put in is on Ford Motor Company, because Lyft, we have already Lyft options, Lyft calls sold, and we already have American Airlines calls sold as well. So let's go to the option chain of Ford Motor Company and see if we can get at least the 13.50 strike price on the 4 shares. There was nothing here apparently. Actually, there is, but it's only for 1 cent, so I might as well try to look for another one. We are 1 week away from the earnings, but we already have the stock, and there is nothing we can do about it. So let's try our best to see if at least we can get some more premium out of this. Apparently, there is no difference between. Oh, there is actually, yeah. So because this is only 1 cent for the 13.5 call, I'm not going to take the risk, and so I will not sell any calls on this because I would be committed. The stocks would be used as a collateral for 2 weeks at the exchange of 1 cent, so it's not really that worthwhile. So let's leave this aside, alright, because it's not really worth to pursue. And so let's use our collateral, our cash collateral, our buying power, to sell some puts. And so, based on what we can see here, given the fact that it's still OD, even though it's going to have the earnings pretty soon, I believe, right? Yeah, it's going to be on October the 31st, so in the next week. Right, so in that case what we are going to have to do, this falls on the Thursday. Alright, so for this week Let's see what we can find. We want to have one that gives us a reasonable probability of not getting called away, so I would probably go for this one. It's close to 80% probability of profit, meaning expire worthless. I would still get a pretty good premium out of this. Let's see. So it's 65 divided by a collateral, if I have to buy them, of course. 700 times 79, and this would be for 4 days. So here, 53%. I think that's a very good premium, so let's go and try to get at least, well, it's not going to be that long because it's already changed, but still we're going to try our best and see if we can get 300 more shares on this. And let's see, let's try to put here more or less across the middle of the bid-ask spread and see if it fills out. It didn't fill out, so let's try to bring this down a little. Alright, didn't fill. I don't want to wait too much for them to get filled out. 65 is still a pretty good premium, so let's see if this is filled. So currently the bid-ask spread is 65.60, so yeah, apparently the stock is recovering, it's rising, but now it was sold. Alright, so this is pretty good. So the order was filled up. We still have 28. So now for the next step, and because we have American Airlines earnings coming, we can, but we will not sell any puts on this. We want to wait until the volatility event comes, which comes on. It's going to be on Thursday. Yes, on Thursday. So let's wait until this earnings release comes, and then we will decide what to do. But now SOD is out of the way, so let's try on Ford Motor Company this time around and see what happens. Ford Motor Company has its releases its earnings next week, so volatility is high. Let's see, 78%. I think I'm gonna go for it. This is a very good premium given the strike price, so it's going to be 18 divided by 1,050 euros, which would be the amount that I would have to spend to buy the shares. So 78, right, and now multiply by 365. Actually, this is a mistake because it should be for 4 days. I hope I did not make a mistake. No, this is for October 25th, so this is correct. I was looking at the wrong option chain, so yeah, this is the correct one. I was wondering why the premium was so generous, but now we found the reason, because it was a 2-week option and not the first one. So there is a big gap between the amount of premiums. Alright, so because of that, this is 70% probability of profit is way too close to the stock price. The strike and the stock price are way too close. In here it would be much better, but the premium is so low that I'm not gonna spend any buying power on these options, and also I'm not gonna sell any puts here because I would have the option open. I would still have the position open while the earnings are released, and I don't want that. I want to be out of any options by the time the earnings are released. So there's nothing we can do about it for the time being. On Ford Motor Company. So let's go for another option on different stocks such as Lyft. Now, again, Lyft is also releasing its earnings it's going to be releasing its earnings on November the 6th. So this would be probably too close to the strike price. Probability to profit 73%. It's way too low for me. I want something more secure. This is probably a good one. I think the premium is reasonable, not that high, but we'll see. It's going to be €7. So let's reset this. So divided by the €1,300 we would have to spend on the 100 shares. Probability to profit is 83%, and times 365 divided by 4 days, 40%, almost 41%. So this is a good premium. I'm going to go for this. And since we need to have approximately 1,500 stocks to lower the price, I believe, because if we manage to get these, this would be 1,500 shares times 13 plus 14.5, which was our original price of acquisition, and we have 500 shares. So this would bring the price to this. We would have 2,000 shares. It's not that much. It's not optimal because I would still have to settle for the strike price of 13.5. But it's still, let's see, if instead of this, if we would use 12 contracts, 12 times 13 plus 14.5 times 5, and we would have 1,800 shares, I believe. No, we would have 1,700 because it's only 12 contracts plus 5. Exactly. 1,344. This appears to be a more reasonable number. We can try to settle for 11, but I think it's going to be, the average price would go beyond the 13.5, so we'll have to see. So plus 14.5 times 5, and in this case we would have 16 contracts. This is even better. Yeah. And if we have,
what I want to know, we have two also here.
If we have only 10 contracts, it's plus 130 because it's 13 times 10. We would have to divide this by 15. It's exactly 13.5. Alright, so this would require a lower commitment from us, and so let's just do 10 contracts here. It's probably best. And let's try to go for the price of 8 cents here. And it was filled, which is quite nice. Alright. So let's just see, yeah. It was good. $80 in premium, so it's nice. Alright, whatever else. We still have 16,000 in buying power. Now, I know that US Bancorp had already released its earnings, so the volatility event is out of the way, so probably it's a good opportunity for us to try to see if there is some good premium to be earned from here. So let's see. This is probably too close to comfort, 77%, but this is also too far away and the premium is way too low. I think this one is going to be, for the probability, it's not going to be that good. Let's see, so it's 20 and alright, so we are back. Apparently there must be some loss of connection, something like that, because apparently we simply lost connection and for some reason now I can't access the website correctly. USB, let's see. Alright, let's hope that now the situation is fixed. We were here, so let's see. Let's just assume that it could be 20 cents times, oops, so it's 20 cents divided by 100 times 77 times 365 divided by 4 days. It's not enough, so and the price came down in between, so I believe that this one will have to go. Let's see what other stocks may be on offer. I know that Guild probably is a possibility. Let's see when it comes to the earnings. Yeah, the stock has been going up, so I would prefer not to go for this because for some reason I feel like there is always a possibility of it coming down, but I mean these premiums are way too low for to be worthwhile, so probably we'll have to go for other options. Let's try some of those known quantities that we already know about. Let's try Pfizer. Pfizer, I think, is also due to release its earnings soon. Actually, it is not. Probably it has not announced yet. So let's see. For example, this one. This one probably is good. So let's see. So it's going to be 11 divided by 2850. So it's going to be times 3% times 365 divided by 4. 28%. It's not that much. If we can manage 12 instead of 11, probably this is going to be an option for us. But let's see. Well, probably the 12 is not no longer be an option because the bid-ask spread just narrowed even more. So let's see, 365 divided by 4. So I must have made a mistake in the calculation, but nonetheless, I don't think it's going to be worthwhile from this point onwards. 365 divided by 4 is 30%. It's not bad, but I think that I may be getting a better option elsewhere. Let's try Anheuser-Busch. Anheuser-Busch is also a possibility. They are not yet due to release the earnings. The price is a little bit more expensive, and the premiums are unfortunately too low. Let's see other possibilities. Let's try Bristol Myers and see what happens. Let's see. Bristol Myers will release its earnings next week, so this will be a tricky one. Now, and the premiums are way too low,
Yeah, it's not the way it currently works.
so it's not really worthwhile.
Also apply 4 factors and
Let's just see.
also when you don't have low
Another options, CCL, Carnival Company. I think he's not yet released its earnings. No, it is not. It's not yet due to release its earnings. Let's see what they offer us. Actually, there might be something here. Let's see. This is a good one. This is a good one. Let's just see. In terms of the fundamentals, 4-star narrow, still below fair value. In terms of the chart, yeah, it has risen quite a bit. Let's hope that over these next few days it won't come down. That would be not nice at all, but we'll see. So 50 times 81 times 365 times 4, 50%. All right, this is a good one. Let's try and sell 3 contracts on here.
I think we finished the last one.
And yeah, so given the bid-ask spread, there's nothing we can do about when I try to sell it at 15, but I don't think that's gonna be accepted. It's not gonna be filled. Yeah, we have no option. We have to push it down to 14. The bid-ask spread is too narrow. Yeah, no problem. It's still a good one. So this is done. All right. We still have 11,000 of buying power, so this will be around 11,000. Let's see other possibilities that we have. Polaris maybe. But Polaris is going to release the earnings tomorrow, so it's a no-no for us. I'm running out of options. Never mind the pun intended, but let's just see. I believe. Let's see.
Yeah. I think it's good to.
What other options do we have?
Yeah, these ones we've got it. Yeah.
We can try Rent to Kill, but Rent to Kill is going to release its earnings now, but there are not that many options to be traded. These are mostly weekly, so I'm not interested in that. Let's see. Let's see Nike. Nike is 82, so chances are the premiums are not going to be that good. Yeah, and in fact it's too low, so
because I want to know if our basic premium is
well, probably
yes.
Pfizer will have to be reconsidered because Pfizer is currently undervalued quite a bit. It's a very good stock, and it has been threading within this range between 30 and 28, so I would say this is something that is probably worthwhile. In the meantime, it's come back to 12, so yeah, I think this is something that we have to really reconsider. So let's see what happens here. Alright. We can't go wrong with these kind of stocks even if we are assigned. So we still have 3,300 euros dollars left as collateral. Well, it makes no sense at this point, but I would say that probably another option on Pfizer would be a good option. Let's see. BBWY is also an option for us, right? Because earnings are not yet been released. They have not yet any earnings announcement. Let's see. 81%. The stock is trading at how much? 31. Well, it's the volatility is around the average, so I would say that this is probably a good possibility for us. 3,000 times 1 times 365 by 4, 49%. Yeah, probably this is a good possibility for us. It has been going like this, but with this kind of momentum, it's really a sensitive decision to make, and personal care. The stock is indeed undervalued, but we have only 3,300 to spare, and you know what, I think we should err on the side of caution here, and because of that, let's not fool around. I think this is probably our best bet. Let's do another one of these ones in here. Let's try to see if this sticks with 13. If it's not, it's not a problem, but let's see. It did stick, so let's go back to 12. Alright, and for now we are done, and yeah, for the time being all that is left is for us to now insert our trades in our scoreboard. And by the way, related to our last video, at the time I forgot to push the formula up to the point at which all the trades would be considered, because I only pushed up until here. We have this amount, which was not correct, so now we need to adjust the formula until the cell 0292, and so we are almost at 13,000. Of course, some of these losses are not to be accounted for because, as I mentioned many times before, those are marked to market. So, but still, we are on course to get to our destination, which is 200k. So, no problem, we'll get there. So, let's start by putting in the SWD, which is due to expire. The calls are due to expire on November the 1st. And this is Estilode, covered call, strike price 98. We sold 8 contracts. Let's bring back the formula that we usually use, which is this one right here. This is our real collateral, right? This is it. And I believe that this was, it's in here, so it was a 167 and 169. We need to determine what is our average. Premium plus 1.67, right? And divided by 8. 1.6875. 1.6875. Now, in terms of the commissions that we paid, which is also something to keep in mind, 499.71. This is 570. All right, so 570. All right, this is done. Now, copy this. Let's do now the puts that we sold. Let's start in alphabetical order, so let's go for the Cardinal company. 3 options, the 3 puts that we sold, right? The maturity is on October the 25th, CCL, cash covered put. The strike price, I believe it was 20.50, if I'm not mistaken. Yes, these were 3 options, and the premium was 14 and the commissions were 332. On to the next one, which, let's see how much it was. So it was the lift. Actually, it was the Estilode, these puts that I had sold. Alright, so Estilode, cash covered put, strike price 87, 3 contracts, and the premiums were 65, and I think we actually got a credit, so minus 43, credit 43, credit 43 plus a debit 31. This is a credit overall of 12, so minus 12. What more can you ask, right? The next one I believe is the lift. It's a cash covered put as well. The strike price was 13, and those were 10 contracts. 10 contracts, 8 cents each, and a commission of 136. So cents, 136. And the final ones were the Pfizer, cash covered put, strike price 28.50, 4 contracts. Let's put them all together because there is no need for us to simply bring them separately, because the premium was the same. Let's see how much we paid in commissions. So it's 43, 48, 68 plus 58, so 60 and 50 is 110. It is 126. This will be 126, but just to keep on the safe side, 126, yeah. Yes, bullseye. So the premium was 12 cents, 126. That's good. Alright, so all the trades have been placed for the time being, and now it's only a matter of time until we wait to see if any of those need to be, any of these options need to be bought back, and the collateral being used to sell more puts, or if we stay until as it is until the end of the week. And for the time being, this is all. Feel free to like the video and subscribe, and if you have any comments or suggestions, please leave those in the comment section below, or you can send me a private message on LinkedIn. I would love to connect with all you guys on there as well. So yeah, I'll see you all in the next one.